Um, Before anything else, touch base with the management of MCX, Mrugank Paranjape, who's MD and CEO of MCX, joins us on the show. Ms. Paranjape, it's great to have you. Thanks very much for taking out the time. There's an exceptional loss of around 24 crores, which weighed on your bottom line. What was the pickup in volumes Q on Q? Give us some more color on the traction across key segments as well.
So if you look at the EBITDA margins, we've moved from 22% last year to 38% in this quarter, and on a sequential basis again from 33% to 38%. So clearly the only factor which contributed to the decline in profits has been on account of treasury income, and there were two components to it, and I would like to explain that. One was in the overall yield, which because of the bond curve which moved very sharply, we had a decrease in our valuations on the mutual fund portfolios, resulting in about 7 crore lesser income than last quarter. The second big reason was that from the inception we've been using the FIMDA methodology for market valuation. Now we've also noticed that the FIMDA methodology was not really in tandem with how the market moves. It's a methodology more used by banks, but mutual funds, insurance companies, all of them use what is called the SLV methodology.
Right.
So we shifted to
What's the EBITDA margin range you're looking for, Mr. Paranjape, to maintain over the year? Operating leverage is on your side at this juncture.
So I think in general we don't give guidance, and we will stick to that. It's not something which we've done, but suffice to say that we expect our ADTs to continue to grow the way they have over the last quarter to now, and that's something which we feel positive for the full year. We are also committed to making sure that our operating costs remain absolutely under control, as we have demonstrated for the last 6 quarters. And I think in line with that, the EBITDA margin should show the same healthy growth that we've shown in the past.
Okay, and what about your strategy for growth this year? Any new product, alliances? Because there were some reports that said that perhaps you could merge with the National Stock Exchange as well. Could you give us some more clarity on whether this is true to begin with?
So on what you asked, your last question, we have issued a clarification which is on the BSE website, which is our primary stock listing exchange. There is no further clarification because there's nothing else to report on that. But really what we would love to talk about is our strategy, and there what we are very happy is that in terms of the sort of path charted by the regulators after SEBI took over in 2015, we've been seeing a consistent evolution which has absolutely remained true to what was set out in the beginning. So we said we will have more products. We've seen options come in. We are very confident that index will come in during this year. We said that distribution will grow. Regulators enabled bank subsidiaries to come onto this platform. The 4 of the top 5 bank subsidiaries are already a member of this exchange, and we are very confident that they will all be starting to distribute, growing our overall market by at least 15 to 20%. Integration of the subsidiaries across commodity and equities again happened, enabled by the regulators, and we see 70 to 80% of the market already integrated. The only place where we've seen slower than expected growth, but we are now confident we will progress very fast, is the institutional segment, and therefore.
Okay, so tell us what's the cause of the glitches on your exchange which led to trading halts, and what are the measures that you're taking to actually plug the vulnerabilities so that they don't repeat again?
So I think we did send out a press release yesterday, and what we had clarified was that on a purely technical basis, what happened was a data packet loss at what is called the TCP, or the transmission control protocol level. This is something below the application at the operating system and hardware. Having identified that problem, we have been able to exactly isolate the component where this has happened, and by isolating that, we have now on a overall implementation where we are confident that this will not recur in future. We have given that similar assurance not just to our regulators but also to all our members. We've been in touch throughout after the incidents on Monday, and we have made sure that they get the confidence that what happened will not recur on the exchange, and that will be our endeavor going forward as well.
And finally, the earlier concern of advent of universal exchange norms which will challenge MCX's monopoly have weighed on your stock. It's down 18% year to date. Competition is expected to resort to predatory pricing to take away volumes from you. What's your assessment and approach regarding the same?
So I think one, in terms of how we exactly react at the point of time when competition starts, is something which we will obviously want to wait and watch and really do closer to when this happens. But let me give you some indicators. One, I think historically neither in India nor globally has pricing been the only factor to move liquidity away. Liquidity is sticky. Liquidity remains because the product is the most relevant product for the market, because the product has been designed with some international linkages, because the product has the entire bandwidth of the ecosystem in terms of physical deliveries as well tied in. So I think there are a lot many aspects to a product which get liquidity to it, and those have been nurtured and grown over the last 15 to 18 years in MCX.
Okay, great speaking with you. Thanks so much for taking the time out and chatting with us about what